Chapter 7, Activity-Based Costing. Hello all. Chapter 7 introduces you to Activity-Based Costing, or ABC. ABC is a tool that has been embraced by a wide variety of service, manufacturing, and nonprofit organizations. The must-know for this chapter include 1. Understanding the basic difference between traditional costing and activity-based costing. 2. Understanding the 5 cost hierarchy categories. 3. Understanding the steps needed for activity-based costing. 4. Knowing how to allocate overhead costs to activity cost pools. 5. Knowing how to calculate activity rates for activity cost pools. 6. Knowing how to assign overhead costs to products based on activity rates. And 7. Knowing how to determine product and customer margins. Like job order costing and process costing, ABC is an accounting method designed to determine total product cost and unit product cost as accurately as possible. As with the traditional methods, direct material and direct labor are easily determined because both can be traced to the finished product. Differences exist between the methods when it comes down to assigning manufacturing overhead. Advocates of activity-based costing argue that ABC assigns manufacturing overhead costs to products in a more logical manner than the traditional approaches of simply allocating costs based on direct labor or machine hours. Activity-based costing first assigns costs to the activities that are the real cost of the overhead. It then assigns the cost of those activities only to the products that are actually demanding the activities. Because of its complexity and cost of implementation, it is ordinarily used as a supplement to, rather than a replacement for, the company's traditional costing system. The underlying premise for activity-based costing is that companies incur costs because of the activities they conduct to accomplish their goals and objectives. Activities drive costs, and costs should be assigned to products or other cost objects in proportion to the volume of the activities that they consume. Activity-based costing differs from traditional cost accounting in 3 ways. First, non-manufacturing as well as manufacturing costs may be assigned to products, but only on a cause and effect basis. For example, ABC systems may assign sales commissions, shipping costs, and warranty repair costs to specific products. Under traditional costing, these things would not get assigned. Only manufacturing costs can be assigned to products. Second, some manufacturing costs may be excluded from product costs. This is because ABC only assigns a cost to a product if decisions concerning that product will cause changes in the cost. ABC excludes 2 types of costs from product cost: organization sustaining cost and cost of operating at idle capacity. Organization sustaining costs are costs incurred to maintain the operations of the business. These costs will be incurred regardless of the level of production. An example would be the heating and cooling for a factory. The traditional methods would include this type of cost as part of the overhead. Cost of operating at idle capacity is the cost of time spent in the manufacturing plant where no production occurs. Again, this type of cost is excluded under ABC. Note that because ABC systems are used to support internal decision-making, they do not need to conform to generally accepted accounting principles. Therefore, while GAAP requires treating selling and administrative expenses as period expenses, and it requires assigning all manufacturing costs to products, ABC systems can assign selling and administrative expenses to products, and they can exclude manufacturing costs from products wherever it's appropriate. Third, the biggest difference between activity-based costing and traditional costing is the assignment of overhead costs. As you know, under traditional costing, overhead costs are assigned to products using a plant-wide predetermined overhead rate. Under ABC, costs are assigned to activity pools, and separate rates are calculated for each activity. In ABC, numerous overhead cost pools are used, each of which is allocated to products and other cost objects using its own unique measure of activity. ABC cost pools are created to correspond to the activities performed in an organization that cause the consumption of overhead resources. Therefore, the total number of ABC cost pools will exceed 1, as in the plant-wide approach, and it is likely to exceed the number of departments within a company, as in the departmental approach, since more than one activity is often performed within each department. Each ABC cost pool has its own unique measure of activity. As we have studied, traditional costing systems usually assign overhead costs to products based on either a plant-wide predetermined overhead rate or multiple departmental rates. These rates were typically determined using direct labor hours and/or machine hours to allocate all overhead costs to the products. Direct labor and machine hours work correctly when changes in the quantity of the base are correlated with the changes in the overhead costs being assigned using the base. Relying exclusively on these bases to assign overhead costs to products has come under increased scrutiny, since each has played a lesser role in the assignment of overhead costs due to the increasing complexity and variety of products produced by companies. Advocates for using ABC systems would argue that using plant-wide or departmental rates today would be an oversimplification of product costing, and that cost drivers such as direct labor and machine hours are arbitrary measures at best. This slide lists some key definitions and concepts. We give you definitions of an activity cost pool, an activity measure. And then we give you a definition and description of the two most common types of activity measures, transaction drivers and duration drivers. An activity is an event that causes the consumption of overhead resources. An activity cost pool, on the other hand, is a bucket in which costs are accumulated that relate to a single activity measure in an ABC system. An activity measure is an allocation base in an activity-based costing system. The term cost driver is also used to refer to an activity measure. As I said, the two most common types of activity measures are transaction drivers and duration drivers. Transaction drivers are simple counts of the number of times an activity occurs, such as the number of bills sent out to customers. Duration drivers, on the other hand, measure the amount of time required to perform an activity, such as the time spent preparing individual bills for each of our customers. It's important to note that transaction drivers are more prevalent in practice than duration drivers because the data is much easier to obtain. The additional accuracy provided by duration drivers oftentimes does not pass the cost-benefit test. Check out the examples of cost pools and the related activity measures or cost drivers. You should note the close correlation between the cost pools and their activity measures. Now that we have a basic understanding of what activity pools are and what we mean by activity measures or cost drivers, let's talk about the 5 steps for implementing an ABC system. So our first step will always be to identify the activities and the activity cost pools as well as their activity measures. We have to know that to start the process. Second, we'll assign overhead costs to activity cost pools. This is referred to as the first stage allocation. The third step is to actually calculate activity rates. The activity rates will tell us the average cost of resources consumed to carry out a particular activity, such as processing purchase orders. The fourth step is to assign overhead costs to the cost objects. When we assign our overhead costs to the cost objects, that's referred to as the second stage allocation. The fifth step is to prepare management reports. 2 of the more frequently prepared reports would include a report showing the product margin or the customer margin. While there are 5 steps to implementing activity-based costing, ABC is said to be a 2-stage process. Stage 1 assigns total estimated overhead costs to activity pools. Stage 2 assigns overhead costs to cost objects, using the activity rates determined for each cost pool. The cost object is typically a product or a customer. This slide attempts to summarize the benefits and challenges for activity-based costing. On the benefits side, I've identified 3. The first indicates that ABC provides management with a better understanding of manufacturing overhead, since costs are allocated based on cost drivers and not some arbitrary method. Its use leads to better product pricing, since the underlying cost to manufacture a product is more accurate. The second benefit states that since manufacturing overhead is allocated based on cost drivers versus an arbitrary measure such as direct labor hours, profitability of product lines and divisions can be determined more accurately, leading to better decision making. The final benefit states that using cost drivers also allows a company to identify business processes that are performing well and those that are not. Management can use this information to ensure resources are directed to those activities that provide value or profit to the company and not to activities which have little value. Just as there are benefits to ABC, there are also challenges. ABC is expensive to implement and maintain. The process of collecting data on every activity in the production process is very time-consuming in a large company that has many different processes and products. And once collected, information must be verified and entered into the company's computer system. This all takes time, takes money. A second challenge is it may be difficult to identify activities that create indirect costs, and companies sometimes have difficulty determining a cost driver for a particular process, especially if the process is complicated or has many steps involved. A final challenge is the recognition that information produced from an ABC system does not conform to recognized accounting standards such as generally accepted accounting principles, and can therefore only be used for internal reporting purposes. This results in additional time and effort required to produce financial reporting that can be shared with external parties such as shareholders and creditors. So the decision to use ABC, or how much of it to use, is really in management's court. They have to make the decision on what they want to do here. Before leaving this chapter, let's talk about something referred to as the hierarchy of cost. Traditional cost systems rely exclusively on allocation bases that are driven by the volume of production. ABC breaks with these traditional systems by defining 5 levels of activity that largely do not relate to the volume of the units produced. The 5 levels serve as a framework for managers to establish cost pools and determine what drives the change in costs for each cost pool. It also provides a sense of how quickly or slowly costs change based on decisions made by management. The first level are referred to as unit-level activities. Unit-level activities are performed each time a unit is produced. They include expenses required to produce a single and particular unit of production. Costs are proportional to the number of units produced. Examples would include providing power to run processing equipment, assembling a product, direct material, labor time, direct labor, and energy to run production machines. A second level of activities is referred to as batch level activities. Batch level activities are performed each time a batch is handled or processed, regardless of how many units are in the batch. The amount of resource consumed depends on the number of batches rather than on the number of units in the batch. Examples here include setting up machines and equipment, processing purchase orders, batch quality inspections, arranging for shipments to customers. The third level of activities includes product level activities. Product level activities relate to specific products and must be carried out regardless of how many batches are run or units are produced or sold. Product level activities include the expense that applies to an entire product line, the cost to develop, produce, and sell specific types of products. Examples would include product engineering or design, product marketing and advertising, and maintaining customer records. The fourth level of activities referred to as customer level activities. Customer level activities relate to specific customers and are not tied to any specific product. These types of activities must be carried out to support customers regardless of what products or services they buy. These activities are not assigned to products because they are not consumed by the product. Examples here would include sales calls, catalog mailings, and general technical support. The fifth level of activities are referred to as organization-sustaining activities. Organization-sustaining activities are carried out regardless of which customers are served, which products are produced, how many batches are run, or how many units are made. These activities apply to the entire company, both factory and administrative offices. They're costs required to sustain business operations. These costs represent resources that are not consumed by products. These costs are not included in product costs. Examples here would include property taxes, insurance, landscaping, cleaning executive offices, providing computer networks, human resources, accounting, legal services, administration, and management of the facility. Well, that takes care of activity-based costing. Thanks for watching the video. Time to practice. Good luck.